Let's have a look at another example of trending in a bullish direction. First, we have an initial bullish move, and this gives us an initial structure high. We don't have a confirmed trend until we've seen an outside return, but we have a low point, and should the market retrace bearish and violate that point, we do not have a trend, and that point is here. The way I like to handle things from this point on, and which I think is the easiest way of doing it, is to notice a retracement and then look for the point where the price continues on past our initial structure high. And the point at which that happens is obviously here. And it's at that point I look for the lowest low of that outside return, which is obviously here. And now we have the outside return. After an initial structure high, watch for the retracement and then for the price to continue bullish. Then draw in the outside return in hindsight. As you can see, we have a complex pullback. But that doesn't matter when looking for an outside return. We simply look for the lowest point and we have our outside return. And as we can see, the price continues bullish and gives us a new structure high. So, having a confirmed bullish trend, we're now looking for more of the same. The price continuing to advance in a bullish direction, putting in more outside returns along the way. So the points at which we are looking for the price to cross move to our new structure high and the lowest point of our most recent outside return. Okay, so rinse and repeat. The question again is, does the price cross either of our two lines? Does it close past our most recent outside return, or does it close past our new structure high? In this case, we can see that it doesn't close past our lower line, and that it does close past our new structure high point. Although there is a candle which pushes past but doesn't close past. This pushes our high point a little higher. And so this candle here is technically the candle which closes to confirm a continuation of the trend. And so now, our lowest point of our new outside return is here. And so again, we draw the lines in. And of course, the price continues to move bearish, giving us a new structure high. And so our lines move up again. Obviously, the price continues beyond the chart that we can see here. So our most recent bullish move is here, covering late June to September. So if we move that left a little, we can see again, we rinse and repeat. Which of our lines does it cross? It's not the lower line. We don't violate our most recent outside return. And instead, the price continues on past the high point of our most recent structure high. The candle which closes is here. And so we have a new outside return. We have a lot of movement bullish and bearish along the way, but that doesn't matter. We draw in the lines from the lowest point and that becomes our outside return. And of course, it continues on and we rinse and repeat. New structure high. Does it cross our previous outside return? If not, when it pushes past our most recent structure high, we have an outside return in hindsight. Stick to the rules and follow them as price advances.